Alright, well, just this Wednesday, we saw the FOMC came out, and so I just want to quickly cover that and what its implications might be for uranium. And by the way, my name is Tucker Kraus. Welcome to my channel. And if you like uranium, you like precious metals, all types of commodity investing, make sure to check around my channel, subscribe, all that good stuff. So without further ado, let's get into it. So what did Jerome Powell necessarily say? That's what we're going to be going over first. So on inflation and supply chains, he admits inflation got out of control and is an issue, but he does also see inflation risk being to the upside. I'm not sure why I said but, because that's kind of continuing with it. He's basically admitting, you know, the Fed got it wrong. And he also thinks they got it wrong on supply chains as well, when it's going to take longer to be resolved, possibly till 2023, in his opinion. Now, on tapering and interest rates, well, he thinks it's going to they're going to continue their taper there at the Fed, regardless of how much the NASDAQ and whatnot have been bleeding off, and eventually is going to begin reducing the Fed's dominancy, but who knows when they're going to do that, or if. Since obviously, you know, government doesn't like to gut smaller, let's just say. And so they also are hinting towards that they're going to start hiking interest rates in March, and that seems to be the general consensus around the whole situation, and that'll be the first time interest rates are actually being hiked since December 2018, which also saw significant stock pullback, so we'll see how that goes. So now the market reaction, you can see the chart I've got right here. This is just of the 5-day chart of the S&P 500. So the markets rose before the speech, as we can see right here on Wednesday. It was rising in advance, but as soon as the speech happened, it dumped right off. And again, that makes sense since, like I just said, December 2018, we saw significant pullbacks due to interest rate increases. And so, of course, when that's announced, of course, stocks aren't going to react kindly to that, especially when they've already in a correction phase. Though we can see it did jump back up since we had solid GDP numbers come in, which was about 6.9% annualized from last quarter, though, of course, that isn't really fair since it was just coming out of the weak lockdown economy. So that's, yeah, no wonder it sold back off. And we ended about on the lows of Wednesday as well, as you can see right here. So what does this necessarily mean for uranium? Well, first let's see how uranium stocks responded. We can see right here, I've got URNM right here and SPUT right here. URNM, we can just see traded almost identically to the general market. That shows that necessarily it's not that the uranium stocks aren't selling off because the uranium thesis is weak. It's because we can see it's just following the general market. Here, let's zoom out here actually. We can see it looks, all these charts look nearly identical, with URNM just being more volatile than the S&P 500, of course. Though we actually see SPUT, this definitely helps prove the point of SPUT, what's happened in a couple days, showing how safe SPUT can be with how little downside risk there is. We can see it actually kept increasing this whole time, whereas the rest pulled back significantly. So good job, SPUT. And so what does it mean for the companies themselves, though? Well, the inflation, if it does continue to be high, that's of course going to eat away at the profits of these mining companies, make it even harder for them to come online, increasing the deficits even more in uranium, which could then, of course, benefit uranium spot price with things like SPUT, and benefit the low-cost producers and, you know, the developers who can get in with a fairly low cost if inflation pushes up prices. Now, interest rates hiking, that'll obviously then hurt these companies since that pulls liquidity out of the system, makes it harder, especially for these volatile stocks, to get money into them to increase their price, and for the mining company itself, that'll of course make it harder to operate since you have the higher interest rates they'll have to deal with. Not to mention, these companies might be less likely to take on debt if there is actual interest rates. They might be more likely to dilute shares. That's why I love Global Atomic, because I don't think they'll do that. So yeah, overall, of course, the long-term thesis is still intact for uranium, but it could, overall, I think it still could be pulled down by the general market, as we see URNM here alongside the general market. We can see that chances are, I think the uranium stocks will still just keep getting pulled down with the market. I just said that. And so we could see them continue to be weak here as the taper continues and possible interest rate hikes. Though, again, I'm not a technical charts, and of course, especially for uranium, not just the general market, it can reverse on a dime, so we could totally see uranium jump up. So, you know, I'm personally just buying the dip. I'm not selling. Long-term thesis is still there. I just wanted to make this quick update video, and see you guys next time. Thanks for watching and all that, too.